Ladder Corporation has been experiencing a higher than expected number of warranty claims in the current year, mainly due to less than ideal product design. For this reason, the warranty expense percentage was changed from 2% to 3% of sales. The warranty expense for the current year was calculated using the new rate of 3% of sales. The controller estimates that if the new rate had been used in the past, an additional 150,000 worth of warranty expense would have been recorded. Does this change require a change in accounting policy? And what journal entry, if any, should Ladder record at the end of fiscal 2020? Okay, so what do you think? How should we account for this change? Is it an error? Was it wrong that they were recording it at 2% of sales in the past? Or is it a change in accounting policy where they're changing the way that they account for warranty claims? Or is this a change in accounting estimate, meaning that they are estimating what their warranty expenses were in the past? They've got more information around what their expected warranty claims are in the future, and therefore they're going to change the rate at which they estimate these warranty claims. Yes, it is a change in accounting estimate. And how do we account for changes in accounting estimates? Well, both IFRS and ASPE are fine with changes in accounting estimates. It's considered part of regular accounting. And of course, we're all getting smarter and getting better information as time goes by. So, what we have to do here is account for this prospectively. So, it says in the question that the company has already recorded warranty expense for the current year using the 3% of sales. So, there's actually no entry required either for the past because we're not restating anything. We're going to record this prospectively, and they've already recorded the correct entry for 2020. So there's actually nothing to do here. So if this question was on an exam, you would just want to explain everything that I had just said, and you would have the correct answer.